I've prepared this video to correspond to Chapter 3, the adjusting process. When you're looking at writing adjusting entries, the thing you need to remember is that if your adjusting entry includes an expense account, then the dollar amount of the adjusting entry is the amount that's been used. If, on the other hand, your journal entry includes a revenue account, then the dollar amount of the adjusting entry is the amount that's been earned during the period. So if you look at Exhibit 9, this is in your textbook, you can see that I've circled the dollar amounts of the adjusting journal entries. I've circled those that involve an expense account in red and those that involve a revenue account in green. And what I'm trying to point out to you here is that the dollar amount represents either the amount used or the amount earned. Additionally, when you look at adjusting journal entries, you should remember that every single adjusting journal entry includes one income statement account and one balance sheet account. We'll take a look at this by looking at Exhibit 9 again. So here's Exhibit 9, and you can see now that I have circled every income statement account title in red and every balance sheet account title in blue. And so if you look back at these adjusting entries, you can see first of all that every entry involves only two titles, and in each entry as a whole, one of those titles has to be a balance sheet account and one has to be an income statement account. One of the things that the author does in this chapter is he describes the adjusting journal entries differently. So it feels like there's 50 of them, but there are really only 7 or 8 different adjusting journal entries. What the trick is, one more time, is that the author will describe them differently. So I have an example of that for you on the next slide. You can see here that I've described the same journal entry 2 different ways. I could probably describe this same journal entry at least 2 more different ways, so 4 different ways. So what I have here is first time the author will tell you, or one of the times the author will tell you supplies used, $500. Or the author might tell you that there were $700 in supplies that have been purchased and only $200 worth of supplies are still on hand. So both of those ways of describing yields the same exact journal entry. A debit to supplies expense for $500 and a credit to supplies for $500. So what I'm showing you now is a trial balance, and if you look up on top it says unadjusted trial balance, and if you remember from Chapter 2, I was always crossing that word out because it is just called a trial balance. So we did this in Chapter 2 before we did any adjusting journal entries. Now in Chapter 3, after you've done your adjusting journal entries, you'll do another trial balance, and this one is called an adjusted trial balance.